The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the December 8th magnificent Monday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything humanly possible to have a magical and magnificent Monday. Remember, what's talked about is a dream. What's envisioned becomes exciting. Of course, what's planned becomes possible. But what's scheduled, that is reality, folks. And in reality, thank you for scheduling your time with me. I am grateful for your presence here today, and I'd love to hear from you. So give me a call at 877-927-6648. International, you can reach out at 727-445-1044. That way, you and I, we can go answer whatever questions you might have about the market. Remember, if you've got a question, someone else has that exact same question. So don't do it for me. Don't do it for you. Do it for someone else. A random act of kindness. Now that is a good way to start your day. This is Magical Monday. Of course, this is TFNN. I'm Steve Rhodes, and welcome to the show right now. Dow is off about 10 points, trading out at 17,949. S&P is off a point, trading at 2,074. The composite's up 4 points. The Russell 2000 up a point and a half. DAX off 31. FTSE down 53. Gold is up $4. Silver up 3 pennies. Light sweet crude, that's down $1.58. We can go take a look at that. Leading the charge here to the upside, you've got Cubis Pharmaceuticals. That's on a buy out, up a nice 35% out here. However, you got the pharmas all over the place. You've got the IBB up $6, up about 2% this morning. You've got Agios Pharmaceuticals up $7.50. Alnylam Pharmaceuticals, I am sure. ALNY. How about Alabama, New York Pharmaceuticals? That's up 7%. You've got Accelerant Pharmaceuticals up 13% out here. Biogen up. Celgene up. Isis Pharmaceuticals. Biomarin Pharmaceuticals. They are lighting up the board out here to the upside. To the downside, we've got Digital River. That's off 28%. That's taking a big hit. Canadian Pacific Railway down $6. Pioneer Natural Resources off 6. EQT. That's off $4. Emerge Energy Services down $4.50. Concho Resources off $4. McDonald's down $3. Again, our call number 877-927-6648. I want to go ahead and finish off a equity just as we're going into the close of hour number 1 for one of our listeners, one of our tigers and well, he's not a tiger. He's certainly one of our tigers, Larry. Let's take a look at Larry. He's looking at a trade. I believe he's in this trade here. And so nice job here, Larry. We only looked at the daily chart here. This is GLUU is the ticker symbol. And one of the things that he was looking at out here was on the weekly chart. He was looking at this, folks. Let's go take a look at what Larry was noticing. And what he noticed was that this equity, GLUU, they are a mobile games type entity out there. And what he noticed was this equity broke away on the week that began February 3rd, 2014. This had 53 million shares to the upside. Now, the actual breakaway is really the candle session before. That's the week that began January 27th. So nearly at the beginning of the year, there's 14 million shares there. The real benchmark is that breakaway. But let's use 14 million shares as we speak. As price came back here last week, it formed a hammer candle. So you got a hammer candle forming on a weekly basis, really light volume, 15 million versus 14, but really versus 53 million shares out here. In fact, the last time it was down was with 37 million shares, and that was on October. The week that began October 27, 2014. So that's pretty nice. So you've got a test of a pretty strong area of support. Now, the nice thing about this for Larry and the trade that he's in here is that his stop just needs to be placed below the low of that hammer candle, and that was from last week, and that low says 335. If you get it close below that, then price could move lower. But let's just say at this stage of the game, price is down at around pretty decent support. Now, this is the weekly chart. The weekly chart supports really what we looked at on a weekly basis, which is he should find some pretty stiff resistance. Doesn't mean that you sell. I'm not sure what the length of time of a trade is on this, but should find some pretty significant resistance right around the 470 area. That's that little downdraft from the week that began October 27, 2014 out here. But what Larry's also noticed, is he's got this little high volume high on the weekly basis from the week that began July 21st, 2014. And I know that's really his target out here is in that 760, 667 level. This is trading at 397. If we look at the longer, even longer term chart here, the monthly chart for this equity, GLUU, you can see you got this nice monthly high volume high out here. So you'd really love to see this actually get into that session. That session being the low of July, and that low out there is 473. So that really becomes your target area. If you can see it close inside there, that says that this equity ought to go test that 760 area. So that's for Larry, and nice job there. Just make sure you have a stop underneath last week's low, and you should be in pretty good shape on that. Now, let's go take a look at some of these equities here that are moving. I didn't get a chance to really take a look at any of those during the last show, so we'll come back. We'll take a look at the indices. We'll take a look at the ETF structures. But I want to take a look at some of these equities here that are popping and dropping, specifically Digital River, DRIV. That's off 27% here this morning. I don't see what the reasons are. Now, this is a monthly chart out here. We'll put the daily on my screen just to get a feel for what's really going on today here. Volume-wise, oh, man, that does look pretty darn nasty. You get volume of 2.7 million shares out here already. This thing had broken away on October 24th with 8 million shares. We've been trading for 45 minutes. You've done about 3 million, 2.7 to be exact. It's coming back into that breakout area with mucho volume out here. We'll see if it can hold this area. That breakaway, that took place on October 23rd, the high of which was about 1776. We've seen a low so far this morning of 1750. You're trading at 1833 as we speak right now, but that's not a good-looking session. So this could be in a consolidation, but it's got a lot of volume falling off of the cliff here. That's Digital River, DRIV. If we look at Pioneer Natural Resources, PXD, is the ticker symbol, up about $7 right now this morning. This thing is gapping down. This has got some problems out here. Pioneer Natural Resources got a B point from October 15, 3.7 million shares, and the gap through that level was with 3.3 million shares. So a little bit lighter on volume. Nonetheless, it was wide-ranging bar out there. It looks like Pioneer Natural Resources, best to put this on, and it's below even a breakaway from back here. That's not a good scene. Let me put this on a weekly chart, see if we can find a level like Larry had found inside of glue as an area where this could be pulling back to. If you take a look at Pioneer Natural Resources, you know, what really sticks out where it's trading right now, looks like where it's trying to trade to right now is this high volume bar from February 11th, the week of February 11, 2013 that began. That high is 133.68. So far, we have seen a low today of 134 even Steven out there. Looks to me like that is where this equity is headed to. Not a wide-ranging bar, just some decent volume out there. I can't really suggest to you that that's really where price will find its support level. I would say more likely this is going to come back and test the week that began April 15, 2013. That's your swing point. That's at the 109.19 is the low. The high is 117.50. Pioneer Natural Resources, PXD, is the ticker symbol. Let's look at, let's see, what else might be on here percentage-wise. How about this one here? CTR Partners, CTP, is the ticker symbol. What are they? Oh, maybe this is a public offering. Let me see here. It said selling some common stocks. Now I'm not going to pay any attention to. Let's look at McDonald's. Let's go see what Mickey D is doing. So what were they out with? Oh, they had November comps. So the November comps were down 2.2%. That's the global comps. I wonder what it was like in the U.S. out here. But let's just simply go see what investors, what the true sellers and buyers of the equity are doing, because they're the most fundamental people inside this stock. So this thing here had traded up to a high here. It opened at 93.41. Got got up to a high of 97.50, if my ticks are correct out here, and I believe that they are, and it has sold off ever since. So this thing is moving lower. It's got volume picking up, 3.1 million shares to the downside. What does that say? It says that McDonald's is likely headed back to the October 16th area, 7.5 million shares there. So McDonald's probably headed to the 89.34 to the 90.29 level. If we take a look at McDonald's, certainly a weaker than market stock inside of the Dow out here. McDonald's inside the Dow, isn't it? Look, it's just a weaker than market stock out here, period. If you take a look at its high back here on May the 14th, 2014, we're nowhere near that. That, by the way, is a level of 103.78, so a weaker than market stock. That's inside of McDonald's. So speaking of that, let me just switch over real quickly. Let me look at the summation index. Now, still, well, in the Dow, just now slightly ticking below the zero line inside its price oscillator out there. What does that mean? That means if it closes below that, then what we would say is that these sellers are in control of the Dow. We got enough signals, or a couple of signals, that suggest that that's likely how the day will end up. And then we start to see a pullback. Now, my preference, if there is a pullback, is a scary pullback. I want people saying, Rhodes, you are wrong. The Santa Claus rally is over. What the heck were you taking a look at? That's what I want. So I want a big, old, scary pullback. And guess what? You should want that too. Now, are we going to get it? I've got no idea. But, of course, last week, if you were listening to the show, I was trying to call a bottom here, the next bottom inside the market. When did I suggest that that might come in? I'm pretty sure I said this coming Friday. So we'll see how that plays out. Got no idea. I wish I could control the market. Then I would give you all the information so that you could have all of your financial dreams out there. I can't. But what we can do is we can take a look at what the message of the market is. And right now, the message of the market inside the NYSE, it's sellers are in control. Inside the Dow, just slightly getting down there. Sellers are in control. Inside the composite, well, it's getting there. It's not there as we speak right now, but it's getting there. Let's go back and take a look at some of these stocks that are moving. Let's look at a couple things here. Let's look at something moving to the upside. Let's go take so to the upside, it basically is pharma. Let's go take a look at the IBB out here. We have a blow-off top in place? Nah, probably not. Let's go take a look at what it's doing. This is the daily chart. She's trading out at 314.34. Volume behind the move so far this morning, 312,000 shares. What do we know about the IBB? There was a swing point from October 31st, 1.7 million shares. Price moved above that, but without the confirmed volume out there. Nonetheless, that doesn't mean that price can't move higher. You just don't have a B point that is taken out with volume. Where is, let's take a look at some other, let me put this on a weekly chart. Let's look at maybe a weekly time frame, get a feel for swing points and volume out here. Let's take a look at the week that ended or began February 24th. That had 8 million shares back there. That high was 275.40. Price got above that level with volume, 7.6 million shares. Without volume. 8.4 million shares. So still not enough volume, no confirmed A to B equals CD, the upside. What's that really put in place out here? Well, let's take a look at this. Let's take a look at the lightning bolt pattern coming off of the April 14th area. That's your A point, your B point out here, right around the 30th of June, your C point. So, you know, what you've got is you've got the IBB. It's 1 to 1.272 is at 317.34. So far, we've seen a high of 315 and 23 pennies. I like the number 23. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 11, S&P down 1, Composite up 4, Russell 2000 up by 84 cents. Let's take a look at the longer-term picture out here. We did this for the S&P 500 earlier this morning. This is the Dow monthly chart out here that we're taking a look at. This is the horizontal trading range boundary lines that we're looking at for the monthly chart here for the Dow. These are levels. These are natural areas of support and resistance. These levels were established way back here at about the 12,250 level and 10,381 level. For the Dow, the number, we saw that the S&P 500, was bumping right up into a ceiling of resistance out there. Inside of the Dow, the ceiling number is 17,855. So I know we're on 18,000 watts. We'll call it 18,000 out here. But the 17,855 number is the Dow horizontal trading range boundary line. You close above it, you come back and you test it. What that says is 18,789, and then 19,723 would be its next numbers. Let me just come over here. Let me see what the weekly numbers are. We're on a monthly time frame chart, but I can go ahead and apply the weekly horizontal ranges out here. So that says at 18,281, there should be some pretty significant resistance inside of the Dow. So if the Dow clears 18,000, continues to move higher, expect its next level of resistance to be right around the 18,281 level. The horizontal trading range are going to be different on a weekly than they are on a monthly. Just as an example here, let me turn off the monthly. Let me switch the chart over to a weekly chart out here, just so we can see what's going on or what's going on inside the weekly time frames. So here are its horizontal trading range levels, so we can see again, and what's going on here is we're just simply utilizing historically all of the data. We're taking a look at opens and closes of candles. We're identifying those areas where we see the largest number of opens and or closes in order to be able to create our boundary lines out here. So at this stage, the 18,281 on a weekly basis for the Dow would be the next area of resistance. If we go take a look at, so we did the S&P, we did the Dow. Let's go do the Russell 2000. We know that's just simply in a consolidation zone out here. What else should we look at? What do I have that's got data that goes back that far? I don't think I can put the gold contract on the continuous contract. Well, let me give it a shot. Let's put GC #F equals 1. Let me put that out here. See what pops up on our screen. I may need to make a couple of adjustments here. Let me do this. Let me change this over to a monthly chart. Let me change this to a monthly as well. There we go. So here's our monthly. I've got the weekly on as well. So that levels right now are the same. Give me a moment here. So if we take a look at the monthly chart for gold, it's showing us that at 1172 is, and we're trading at 1194. Right now we're trading down in essence into what could be considered a area of support. This little midpoint, and I have to go back and take a look at it. But we can see here, so here's the gold contract. This only takes us back to data through 2002. I'd really prefer to have more data out here in order to be able to create these horizontal trading ranges out here. So in any event, that's what's going on inside of the gold. If we take a look at the NASDAQ Composites UMPQ out here, we'll go see what the monthly numbers are, see if it's running into any kind of resistance, and it's not. So the NASDAQ Composite, in essence has cleared its resistance level, which was 46.53, and its message is that it wants to move up to the 5,068. The gift would be if it would actually come back and test 46.53. So that would be about 130 points to the south, test that area, and then move higher. Then it's not that's out of the feasible study of being able to do that. But if you were to see a pullback, that 4650 area inside the NASDAQ Composite ought to act as a strong barrier of support. Let's go take a look at some commodities out here. Let's go take a look at light sweet crude. We haven't looked at that. That's off of $1.59 right now. She's trading out at 64.36. Let's go see if there's any at least shorter term patterns out here that we can pay attention to, or any kind of signs of anything out here. And I really don't see on this contract. I don't see anything worth paying attention to. Let's just go to a longer term chart out here and put up all the data. CL #F. There we go. And let's go take a look at a quarterly chart. Let's just do a quarterly chart. Can we do a quarterly chart here? Quarterly chart here for light sweet crude. Give us a feel for where we're at and what's going on. So as we look at a quarterly chart, we come all the way back into the swing point low from back in 2009 all the way to the high that was put in here during April of 2011. 64.38 is the actual 0.618 retracement. We're trading at 64.38. You gotta love Leonardo da Fibonacci de Pisa. This is Steve Rhodes. This is TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is off 6. S&P is flat. Composite up 10. Russell up 5 points. We were taking a look at the quarterly chart here for light sweet crude, the continuous contract. Just taking a look at the low off of the January 2009 level. That was at 33.20, and you go from that low to the high that was placed, that was put in April of 2011 out at the 114.83 mark. 64.38 happens to be your 0.68 retracement. Now, as prices move back into this area, it's a quarterly chart, obviously, so this doesn't end until December. But you got a nice wide-ranging bar coming in here. Says that how important that 64.38 level is. This would say to me, unless we see some other kind of significant change, you're more likely looking at 50.67 as the next stop for light sweet crude out there, $50.67. But you got to crack 64.38, and you got to do it with some pretty decent volume. And then I'm not saying that's even out of the question for it to be able to do that, but I think light sweet crude is the marketplace to stay away from for a while. Let things kind of play out. So that's what's going on there. Let's take a look at the Nasdaq. Let's take a look at the NQ. Let's look at the daily chart out here. And if we look at the daily chart, what is interesting, if you're watching us on Tiger TV, if we come off of the low that formed back here October the 16th out here, you don't really see much in the way of bearish reversal signals, at least anything that has stuck, anything that's had any follow through during its following session. As an example out here, the first bearish reversal signal to appear was on November the 4th. That was a little bearish engulfing candle, but the body of the prior session was so small, that was an easy thing for it to do out there. No follow through on the very next session. The next time that we saw a bearish reversal signal, well, you saw a little dark cloud cover candle. That was on November 19th. No follow through the next day, so that was just simply erased. We saw a bear sash candle that took place on December the 1st. And that candle actually, although it didn't necessarily have follow through to the downside, the move on the trading session of December 2nd wasn't enough to erase that. So what do we know about the NQ? What we know about the NQ on a daily chart, it's either in its third or its seventh wave to the upside that was formed back on that Friday after Thanksgiving, November 28th. A little bearish reversal signal out here in a market that is tired or it has lost its way. If we take a look at this, I'm going to expand this up for you on Tiger TV. The trading session out here on December 3rd and December the 4th, those are referred to as high wave candles. What's a high wave candle? It looks like a doji. It smells like a doji, but it doesn't taste like a doji candle out there. It just simply says the market has lost its way. What has more meaning, believe it or not, it is that little doji candle out here, and that actually took place on December the 5th. What does that mean? That was Friday's session. If you see it close lower today, the Japanese have an expression, the leaves will be falling off of the trees. We don't have that as we speak right now. A doji candle at a resistance area such as this area where we're at here right now, meaning the November 28th and the December 1st level, that's an important area to monitor. Why? Because the market's just simply communicating to us that this is real resistance. What happens when you take out resistance? Old resistance should become new support. Inside of the NQ out here, that says that taking out that high from November 28th, 43.48, that is important. That would be like a continuation move, not a continuation candle, but it would say one of the most bearish type of signals failed. And you can learn a ton from failure out here. So right now, at this stage of the game, as we speak about today, the market isn't doing a whole lot. We've got 3 days in a row. That was Wednesday, Thursday, and Friday of last week where the market said that it was confused. That's what the high wave candle means. The doji candle, yeah, it says it's confused, but it says, hey, I'm confused at resistance out here. Lower close today. Now, a lower close today, in order to have any kind of real impact, you got to watch that level of 42.85. All I'm doing is interpreting what the market is communicating to us. Until it gets below 42.85, it's just tired. It's just recharging. To travel in which direction, I don't really know. I know you've also got the nice TAS market profile boxes out here on the daily contract. 42.60 is an old level of resistance that now is a level of support. You got 42.16. It's at the 42.16 level where if price were to pull back to that area, that probably is the next buy, and to close below that, we would start taking a look at some deeper retracements out here. But that's the story of one of the leaders in the clubhouse. That's the daily chart for the NQ. If we take a look at the daily chart out here for the Dow, do the same kind of a thing out here. If we take a look at the Dow, it had formed a little doji candle last Thursday on December the 4th, but it showed that there were no leaves that were fallen from the tree as the market had moved higher on Friday. On Friday, it got up and it extended that seventh wave session to the upside. Today, if we're to see any kind of spike above 17,980, that too would extend, either wave number 3 or wave number 7 out here. What has the Dow not done? Just like the Nasdaq, just like the S&P, hasn't closed below 13 period exponential moving average. That's priced out at about the 17,781, a little bit above that, I believe, but not too much. Inside the Dow, key numbers 17,718 out here as we speak. Any kind of real reversal signals, bearish reversal signals inside of the Dow? Here's the deal. Absolutely, positively, zilch, nada. Not a single bearish reversal candle to even speak of since coming off of the low, since creating that morning star pattern. That was back on October the 17th. And folks, if you'd like to learn about Japanese candlestick charting, which you should, if you want to be a technologist and be able to take in the information that the bulls and the bears, the sign painters of the market, are providing us, come on over to the homepage at TFNN.com. I've got a 7-week workshop that began on Saturday, November the 22nd. So you've got an immediate 3-hour workshop where I will teach you exactly what you need to know about Japanese candle. What I'll teach you during that 3-hour session will just blow your mind. Blow your mind in a good way, in a great way, and it'll be the starting point. If I were, and here's how I always do my workshops. I do my workshops as if, number one, if I were going to pass along the best lessons that I could to my kids and leave them with something and get right to the point. So I give the what I like to say is I like to just really be able to maximize your time out there, because time you can't get back. That's what I do. So it's really the best of the best of the best. It always is that way, and I try to do that in a condensed period so that you can just focus on what you really need to focus in on. So come on over to the homepage at TFNN.com. People are trying to buy you gifts. Tell them that the gift you want is the gift of continuing your education. I mean, if you're not growing, you're what? Yeah. If you're not growing, you're not living. That's about as simple as you thought I was going to say something else. It's as simple as that. So come on over, sign up for that workshop. Today I sent out the second weekly update to the newsletter. So it basically comes with 7 weeks worth of follow-up. You got access to me by phone, by Skype, by email, whatever it is that I can do to assist you with your trading and investing. It's coaching, it's a trading, and so not to belabor it, but I know that everybody is this time of the year is trying to buy gifts. Get the gift that will keep on giving out here. So in the case of the Dow, have we seen any kind of reversal signal whatsoever? The answer to that question is absolutely, positively not. And if you take out the high here from Friday, you're just going to extend the move higher out here. But it's actually the Dow that is the stronger of them all. That's why we want to be. That's why we're so vigilant about paying attention to this pattern out here inside of the Dow. As soon as I can find it again, if the Dow is so strong, then why is it that the General Electric is not participating? And the reason that I asked that question, or I posed that question, is that divergences between General Electric, meaning the direction that GE is trading, versus the Dow in the past have mattered. And the question, look, GE can rectify itself. It can resolve itself. It can start moving higher. It can say the heck with the fact that I've been moving lower, and all my friends up there, the other 29 friends of mine, have been moving higher. But that's not really the case out here. And so inside of the Dow, the GE is sending out a very important message out here. And that's just one that we still might see that scary drop. So if we do see that, know that it was GE that was actually giving us the signal. It wasn't Steve Rhodes that was giving you the signal. It was really GE and maybe high-yield bonds. The high-yield bonds out here, they've been providing a signal of my goodness, look out. Except for all the other elements of the charts and seasonality, if we were looking at this pattern at any other point in time, it would be saying, holy shnikes out here. Take a look at this. Here's your high-yield bonds. These things have been moving lower. These things typically move in the same direction as the stock market. And when there's a divergence in place, that's what we have right now between the S&P 500, that's the top portion of my chart, and the lower portion of my chart, which is the Western Asset High Income Fund out here. When we see a divergence between these two out here in the past, it has mattered. And guess who's won the battle? Believe it or not, it's those high-income, bond funds out here. In this case, it isn't working. It's providing us with a message of caution out there. How about the Dow and the utilities index? Do I have that chart up here on my screen? Yeah, let's take a look at the Dow Jones Utilities. Yeah. So what do we have going on out here as we speak? We have. Here's one divergent pattern, but you've got another one that's, it's kind of popped up here. Let me just do this. Let me just put up a new little thing. So from the high out here on December, it looks like December the 2nd to where it is that we're right now, we're still seeing a lower high inside the utilities versus higher prices inside of the Dow. Typically, these patterns, believe it or not, it is this pattern here that typically goes ahead and is a precursor to to something that's going to just come from out of nowhere. But it's not going to come out from nowhere if it does come out, because you and I, we've already taken a look at that. So there are some reasons to just simply be gosh darn cautious out here. The VIX index, as we speak right now, trading at 1269, but it's inching its way higher. So you got the VIX making a higher bottom. Was the S&P a little bit positive? The S&P is just flat out here as we speak right now. But in this case here, you got the VIX just kind of inching higher. Maybe over the next day or so, continues to inch higher and get close to that 50-day exponential moving average. That's where all holy heck could break loose out there at $14.18. We're nowhere near there. If we get there today, you're going to have one-day rate of change that says a bounce coming over the course of the next two trading sessions, but we're not there just yet. If we take a look at the trouble underneath the covers, if there is any, that's the summation index inside the Dow, still back to above the price oscillator line, so that's bullish. New York Stock Exchange says, not so fast, but the NASDAQ Composite says, hey, I still like moving higher out here. That looks bullish. The New York Stock Exchange does not. And the Dow, I'm going to call it at this stage of the game, is kind of somewhat neutral. However, not a second. I can guarantee you one thing. You don't have a bearish reversal signal inside something that's moving higher. Guess what? It's not moving lower. There's no question about that. So you get your first reversal signal, you get some follow-through on the next trading session, then that's a whole new thing to take a look at. So that's kind of a better, maybe an, I don't know, but better, but it's a overview, of the market and where it is that we are at as we speak right now. So we looked at light sweet crude. We've taken a look at gold and silver. Let's take a look at high-grade copper out here. Let's go take a look and see what that is doing as we speak, see what kind of patterns. This is the quarterly chart. We don't want that. We want to take a look at the daily chart and see what pattern we can find out here, if any. Do we have any bullish reversal signals? Well, we do. We got a little bullish engulfing candle took place out here on last Thursday, February the 4th. Is that enough to say that copper has found a bottom? No, but let's go take a look at copper tone out here. Let's go take a look at the A to B equals CD patterns that have formed out here. Let's use as an A point the July 14th high. Let's use as a B point the August 15th low. And the C point that we're going to use is going to be up here on August 25th. So what copper has done is made a 1 to 2 A to B equals CD to the downside. Made a nice little piercing candle right here on December the 1st, but no real follow-through or anything along those lines here. Nice little bullish engulfing candle out here, as I mentioned on Thursday. A couple little dojis. So it looks like what copper is trying to do is to form some type of bottom. If we take a look at expansions of swing points out here from a low to a high, that low to high means I'm going to take a look at the March 19th 2014 low and come all the way up to our A point. And what we're going to see here is that if price fails in this area, what price ought to do inside of copper is move down to about the 277 mark. That's where you've got a 1.272 expansion inside of copper, and that would set up a potential butterfly pattern. That is what's going on there. Let's go take a look at the ETF structures. Let me do that for you. Let's start by taking a look at the IWM. She's up 58 cents here this morning. Let's look at the daily chart out here. The IWM is really, instead of looking at the daily chart, let's go look at the weekly chart out here. The weekly chart, you talk about dojis in a row. Well, in the case of the IWM, she had 4 of them. I mean, it was amazing. Not amazing, but it was what it was. You don't see this too often out here. That week beginning November 3rd, November 10th, November 17th, and November 24th. Had to just simply frustrate anybody who was trading TNA or TZA during that entire time period out there. Now, what do we know about last week? Last week, it rejected the swing point low from the June 30th time frame. It was 146 million, but last week was pushing in with 156 million. What does that say? That says that swing point, in fact, would be at least tested again. And today, it is being tested. You are trading at 118.32. The key number inside the IWM, in my opinion, is either 117.83 or 120.97. Steve Rhodes, TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. As we wind up the last segment here, hey, don't forget. Come on over to the homepage of TFNN.com. A lot of things going on. A lot of things to sign up for. Number one, John Logan, who kicks us off. He kicks us off. The Hotel California check-in time now each day is at 8 a.m. He kicks things off for us. He's going to be doing a workshop tomorrow evening. He's going to be using. He's got these great tools as part of his TAS signal boxes out there. Really helpful in identifying the market breadth and what's going on, a great scanner. So come on over to the homepage of TFNN.com. You can test drive that for the next 30 days. So that is tomorrow evening. You certainly want to do that. I mean, look, I would never ask you to do something that I wouldn't do. I'm going to be at the workshop out there, and I would suggest that you do as well. Always great to be able to glean some new pieces of information. So we've got that going on. You've got Tom's, new offer for the gold report out there. You should sign up for that. I mean, all gold stocks are not the same out there, and there's no better metals master than Tom. So come on over and check that out. You've got access to, if you'd really like to understand the lightning bolt pattern, the A to B equals CD pattern. If you'd really like to understand Japanese candlesticks out there, and you really should. These are things that you didn't get a lot of free stuff. We gave you a lot of free just by listening in here. But if you really want to focus in on what it is that you really need to pay attention to, then buy yourself a gift. Have somebody buy you a gift. Go sign up for my 7-week trading course out there. So a lot of great tools, a lot of great things to help you take your game to the next level. And hey, get your kids involved. Get your kids involved. Let's both you and I, let's teach them everything that they need to know for the next 30, 40, 50, 60, 70 years out there, so that they can attain the financial freedom that each of us want them to be able to have out there. So, and of course, you got the TFNN in HD. So as we round things up, we've really focused in on the overall markets out here, help you identify areas of support and resistance. If you're wondering what it is that my expectation is at this stage here, I'm still holding out that there are enough signals that we're going to see something that's going to come out of the woodwork, and it's going to form some type of scary low between today and Friday. I don't know what it is. I don't know where it comes from, and I don't know if it's going to happen. But if it does happen, this is the cool thing. This is the real cool thing. I'm not saying that you got to go short, but this is the cool thing. If it does happen, you will expect it, and then you'll know what to do. And you won't be like a deer in the headlights, because we're going to kind of plan our strategy. We're saying, okay, there might be one more move lower before we put in that nice, solid Santa Claus rally, which could go beyond just December 25th and could go beyond December 31st out there. It might be, it's not going to be like the bottom that formed here on October the 15th, but it could be a pretty darn good bottom. Likewise, does that have to happen? No. But if it does happen, you will have heard it here at TFNN, and that'll be a good thing. And then you'll be able to take some action out there. So you got a flat market today. The Dow's off 4. The S&P is off 70 cents. Not flat in the composite, not flat in the Russell 2000. So it's not like we have everybody marching forward out here. We've got the euro-yen. That's back that's actually got a potential key reversal session going today. We'll see if the euro can get off the bottom. Gold's up $3, silver up 3 pennies out there. So stay tuned. Our man Basil Chapman is up next. After Basil, we've got our man Larry Pesavento. What a beautiful thing we've got here at TFNN. And then we've got our man Darryl Martin. He'll take you through the Nadex platform. No one better to do that in the world. And then we got David White, of course, Power Law Victor Indicator that he's got, and so many great tools. And then, of course, the Tom O'Brien Show from 3 to 5. Have a great Monday, folks. I look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.